Hi everyone, welcome to the 21st module of GK Today's Banking Awareness course. Today's topic is Important Boards and Committees of RBI. I'm Ritrisha from GK Today and let us begin. What is the function of Board for Financial Supervision? This is an easy one, the answer is in the name. And the correct answer is of course option A, Supervision of the Financial Sector. The Board of Financial Supervision was constituted in November 1994 as a committee of the Central Board of Directors. Its objective is to undertake consolidated supervision of the financial sector comprising commercial banks, financial institutions, as well as non-banking finance companies. The RBI carries out its functions related to financial supervision under the guidance of this particular board. When was the Board for Payment and Settlement Systems established in the RBI? Correct answer is 2005. The Board for Payment and Settlement System was constituted by the RBI in 2005 as a committee of its central board. The functions are to regulate and supervise the payment and settlement systems, of course, and it is also chaired by the governor of RBI, much like BFS, and its members are all the 4 deputy governors and 2 non-official directors of the central board. Who heads the Board for Payment and Settlement Systems? We just talked about it in the last question. Correct answer is the RBI governor. It is chaired by the governor of RBI and all 4 deputy governors and 2 non-official directors of the central board are members of this board. Which of the following is not a subsidiary of Reserve Bank of India? So as we know, Reserve Bank of India has 3 main subsidiaries. Among the given options, only State Bank of India is not a subsidiary. So the other 3, the Bharatiya Reserve Bank Note Mudran Private Limited, which is the body that handles minting of our money, the NABARD, which is for agriculture and rural development, and the National Housing Bank, which is of course, as the name suggests, for housing and related activities. What kind of deposits are covered by DICGC? Firstly, before we answer, what is the full form of DICGC? All of you who know the answer, please type it in the comments. I'll give you 4 seconds for that. I hope you guys are done. So the correct answer is DICGC stands for Deposit Insurance and Credit Guarantee Corporation. And the correct answer here is it ensures all of the above. So DICGC ensures all deposits such as savings, fixed, current and recurring deposits with eligible banks except for the ones that we are going to talk about now. What does it not ensure? It doesn't ensure deposits of foreign governments, doesn't ensure deposits of central or state governments, doesn't ensure interbank deposits or deposits of the state land development banks with state cooperative banks, or any amount due on account of any deposit received outside of India, or any amount which has been specifically exempted by the corporation with the previous approval of Reserve Bank of India. But it does ensure all bank deposits such as saving, fixed, current, recurring deposit for up to the limit of rupees 1 lakh for both principal and interest amount held. And also this body is headquartered in Mumbai and is headed by one of the deputy governors of RBI. Who was the chairman of Committee of Deepening of Digital Payments formed by RBI? This is a fairly new one. This just happened this year. Correct answer is Nandan Nilekani. Nandan Nilekani, who headed the committee for Deepening of Digital Payments. This was set up in January 2019 by RBI. This was a 5-member panel and it was chairman by Nandan Nilekani. And the idea was to provide suggestions on deepening digital payments with a view of encouraging digitization of payments and of enhancing financial inclusion through digitization. Who was the chairman of the Household Finance Committee set up by RBI? Correct answer is Tarun Ramadorai. Tarun Ramadorai, who is a professor of financial economics at University of Oxford, headed the 2016 Committee for Household Finance. Now, what did this committee do? What they tried to figure out was by studying various facets of household finance, their idea was to find out the reasons behind the deviation of financial allocations of Indian households, try to understand and evaluate the design of new systems and the redesign of existing systems of incentives and regulations, and evaluate household demands in financial markets for assets and assess the role of new financial technologies. They submitted their report in August of 2017, where they discovered that only 5% of the average Indian household's wealth is in financial assets. The remaining 95% is in physical assets. So what are physical assets? Physical assets are gold, real estate, vehicles, such things. 95% of Indian household assets are physical. 77% of that is in real estate, 11% is in gold, and 7% is in durables such as vehicles, livestock, equipment, etc. This trend is very different from developed countries, and the main reason is because Indian people have a lack of trust in financial institutions, so they depend more on money that they can see, such as real estate, gold, etc., which can be held by them instead of putting money in actual financial institutes. What were the recommendations of Janak Raj Committee? Correct answer is linking bank lending rates to a market benchmark. This was a committee that was set up in October 2017, and it recommended linking bank lending rates to a market benchmark in a bid to hasten monetary policy transmission as well as improve transparency in the rate setting by lenders. The panel was headed by Janak Raj, who was the principal advisor Monetary Policy Department, and recommended that all floating rate loans advanced from April of that year could be referenced to one of the three external benchmarks. They also suggested that a risk-free curve involving rates on treasury bills or certificate of deposit rates or the central bank's policy of repo rate. They also pulled up banks for arbitrariness in calculating the base rate and marginal cost of funds linked lending rate. There was also instances where they found out that people within the same risk bracket were being charged different premiums. So all of this was meant to find a balance in the market so that it could be standardized. What was the objective of H Malegam Committee set up by the RBI? Correct answer is monitoring of bad loans. Reserve Bank of India in February 2018 constituted an expert committee to look into the entire gamut of issues relating to classification of bad loans, effectiveness of audits, and rising incidents of frauds. The committee was headed by H Malegam, who was a former member of Central Board of Directors of RBI. And why did this happen? So this committee was set up in the wake of the rupees 11,400 crore SWIFT bank fraud that happened in Punjab National Bank. And this committee was supposed to look into reasons for the high divergence observed in asset classification and provisioning by banks. Who was the chairman of the Committee on Medium-Term Path on Financial Inclusion? Correct answer is Deepak Mohanty. This was the Committee on Medium-Term Path on Financial Inclusion, also known as the Deepak Mohanty Committee, and it was set up in July 2015 to examine the existing policy regarding financial inclusion and to form a 5-year medium-term action plan. This committee was tasked to suggest a plan on several components with regard to payments, deposits, credit, social security transfer, pension, and insurance. That's all for this video. If you like this, don't forget to like this video and share it with your friends. Keep subscribing to GK Today for more such content. The next video is going to be on the monetary policies of the RBI. It is a very important video and it's going to be up in a few hours. Don't miss it and keep following GK Today. Until next time, goodbye and good luck.